Hey everyone, if you're watching this video, you're probably aware that ZIM stock paused its dividend in the most recent quarter. So in this video, I was going to go a little bit deeper and talk about why ZIM paused its dividend and the factors behind the cause of that. So let's get right into the details here. If you've been following ZIM stock, you know it had one of the most robust dividends in the stock market. Look at this comparison between ZIM's dividend per share, which it paid a $27.55 dividend per share in its most recent year, compared to its stock price when that happened was around 13, well, let's say $15 per share. So its dividend was way above the stock price, resulting in a dividend yield of over 100%, which I'm sure attracted a lot of dividend stock investors looking at ZIM and asking, hey man, a over 100% dividend yield, that's incredible. But is it sustainable? Can a, can a dividend yield be above 100%? And the answer to that question is most likely yes, but it doesn't happen very often because the dividend yield is more closely tied to the earnings per share rather than the stock price. So let me show you this other slide here. So here I have ZIM's dividend per share on a quarterly basis in the purple, and then what I have in the orange is ZIM's earnings per share on a quarterly basis. And what you notice here is ZIM's earnings per share skyrocketed starting in 2021 and in early 2022 before it started to collapse. This was closely connected to the fact that shipping rates during the middle part of the pandemic exploded, and that allowed ZIM's profitability to soar, and that increased earnings per share. And ZIM has an interesting dividend policy. It pays out a percentage of its earnings per share of its net income. So its dividend per share policy is connected to its net income. Some companies' dividend policy is simply to set the dividend and try to increase that dividend payment every year. Regardless of where profitability is, they try to sustain a dividend increasing policy. ZIM is not one of those companies. ZIM instead has connected its dividend to its profits, and so its dividends are going to be volatile. They're going to move up and down along with its earnings per share. And you noticed when its earnings per share soared, so did its dividend per share. But as its earnings started to come down, so did the dividends. And in its most recent quarter, you notice ZIM's earnings were actually negative 50 cents earnings per share. And so that's why in the end of the most recent quarter, ZIM said we're pausing the dividend because we're paying a percentage of net income as our dividend. That's our policy. And if our net income is negative, then we can't pay a dividend as per our policy indicates. So let's take a closer look at what's going on and the dividend policy. So this is straight from the CFO, an update from their most recent quarter, stating that while our full year has deteriorated, we still expect to generate positive EBIT in 2023. That's earnings before interest and taxes. But we expect to deliver results in the lower end of our target. So the lower end of the target, their target was an earnings before interest and taxes of 100 to 500 million. So now investors should expect something in the range of between 100 and 300 million of earnings before interest and taxes. So this assumes that freight rates and volume will continue to be volatile. And so given the net loss they recorded this quarter, per our dividend policy to distribute 30 to 50% of our annual net income in quarterly installments, we are not distributing a dividend this quarter. So the supply-demand balance for 2023 points to a clear risk of oversupply. So these headwinds are likely to persist for the rest of the year. So when will ZIM reinstate this dividend, and will it be this year? I will say it's unlikely to be this year because if you look at their guidance, they're saying earnings before interest and taxes of 100 to 500 million, then they're saying that they're going to be in the lower end of this range. So you can expect 100 to 300 million in earnings before interest and taxes. So from this figure, we need to subtract interest expenses. And if you look at ZIM's most recent quarterly interest expense, it came in at 51 million. And if we annualize that, that will result in over 200 million in interest expense. So if we subtract the 200 million in interest expense from the earnings before interest and taxes, that brings it very close to being break even or negative on the bottom line. And as per ZIM's dividend policy, that means they don't have profits to distribute as dividends. So it's unlikely to reinstate this dividend in 2023 if it sticks to its policy. Now it might change its dividend policy, which is also unlikely, but if it sticks to its dividend policy and given the guidance the company is giving for profitability in 2023, it's unlikely the company will reinstate its dividend. So these headwinds are the reason, the headwinds to profitability, the decreasing profitability are the reason why ZIM cut its dividend, and it's also the reason why ZIM will take some time before it will reinstate the dividend. If you want to know when ZIM will reinstate the dividend, pay close attention to ZIM's profitability. That will dictate when the dividend will come back and how large the dividend will be. It's closely connected to its profitability. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.